Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Well, I must say, Fridays are supposed to be sort of, winding down into the weekend. Not a pickup in activity, but a slowdown in activity. I'm talking about news flow, but it's the exact opposite what has happened over the last, 12 hours or so with tariffs and more tariffs. Another fresh sweeping set, which will be the focus here over the next 60 minutes or so into market open. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, morning.
Hi, morning folks. Morning Nigel, morning Prashant.
Yeah.
You really winding down? You live in the Donald Trump era. What are you talking about? There can never be a wind down. But yes, we have those big headlines to contend with. On Pharma right now, it's not on generic drugs. Yes. It's on branded drugs, on IP-protected drugs. And we'll, of course, get to the implications.
Well, Trump's on a roll overnight. Particularly in the last 2 to 3 hours, he's been very, very active. So we'll address that. And yesterday's market action actually wasn't very encouraging by any stretch of imagination. Just that the Navratri color today is green. That's the lone hope.
But actually, pharma stocks were, I don't know if the market had an inkling of this or not, but overall pharma stocks were under pressure yesterday.
Yeah, no, absolutely. It's been, are these those sectoral tariffs that he's been talking about under Section 232? We don't know. It looks like it. So let's take it from the top, right? And I won't start with the US market action, but I'll start with what has been announced. So Trump has delivered sweeping tariff shock. Essentially, the message is pretty simple. It's the same, which is build in America or pay a tariff if you're importing goods made outside of America into the US market and selling to the US consumer. So he's targeted big pharma. So when we say big pharma, basic difference, innovators, guys who make the original drugs, that's essentially big pharma. What big pharma refers to, Eli Lilly, the Roche, Novartis, Pfizer, those are the big pharma names. Whereas here in India, you got mostly generic players, companies which make copies of these drugs and sell at a fraction of price to the US. Of course, there is patented stuff here in India as well, but it is a small fraction of what is exported into the US. So that's point number one, right? Now, 100% tariffs on imported drugs unless US manufacturing begins. That is what has happened. That post will come up, and I just want to read that post up with regards to the tariff bit, or the pharma bit, and this is what it says, right? And I think the last portion is what is important. He says that, unless a company is building their pharmaceutical manufacturing plant in America and is building, he specifically says, will be defined as breaking ground and or under construction. And I think that is the most crucial part here, because most large US company, most large innovator companies, a lot of them are based out of Switzerland, many of them are in Germany, and of course the largest ones are in the US. All of them are building, will mostly qualify under the definition, which is they are in the process of building in America, as defined by that tweet. We'll wait for specific details, etc., but that's the first reading of the situation, and we'll get you updates, etc. But I think purely from a first-order impact point of view, there isn't very much impact. If you remember what's happened with semiconductors, something very similar happened. And all these companies came in and promised investments, etc. They were already, by the way, making investments in the US for one reason or the other. And there's been very little impact in terms of tariffs on semiconductors being brought in from outside, chips brought in from outside into America. So I think this seems very similar to that kind of a playbook. Second order, third order impact, these companies source from outside India. We'll have to see. We'll have to work through those implications. And we will get you that. Now, 25% tariff on heavy trucks as well has what has been impacted, but that's not it. The kitchen cabinets, bathroom vanities, unholstered furniture, and as I understand it, across at least most of these items, heavy trucks will try and get in touch with the management of Bharat Forge I think companies like Ashok Leyland, etc., export into the US, but we'll get you an implication. But I think the other stuff, it's all made in countries like Vietnam, Southeast Asia, China, etc. Very little here in India. It's made here, but not exported to the US. So that's some specifics. Now I come to the overnight market action, and here Nasdaq down about 0.5%. Dollar index has seen a meaningful move. We are now almost 98.5. 0.5% day before yesterday, 0.6% last night as well. Oil's moved up to almost $70 a barrel as well. So in terms of these macro markets, not looking all that great, at least as you start this morning. Nifty is closed yesterday below the daily average, key daily averages, right? I think 5 days in a row, the index has been down. The final support is 24,800. When I say final, basically a defense of this entire up move. I mean, you can see, after a 1,000-point move, an index can correct. But you got to define it somewhere that it's just a correction of this 1,000-point move, and then, the 1,000-point move, that rally will continue. So a defense of that move is 24,800. It's a 61.8% of the move, retracement of the move. So we'll see if this gets taken out or not. Bank Nifty slightly outperforming the Nifty. Here the support is the 20-day moving average, which comes in at 54,680. GIFT Nifty will give you a quick sense of how we're likely to start. We'll pick it up from there. 12 points, neither here nor there, at least at the word go. Nigel is standing by with the F&O stats and the picture there. Nigel, morning.
Well, morning. The big problem this week has been the FI selling, and that's outweighed the DI buying as well. And, in yesterday's trading session, they almost nullified each other. But particularly towards the final hour of trade, you had the FI selling. Nimish was telling us that could be some kind of selling that was due. And that's precisely what it played out. Even the gross volumes were extremely high. Short point was, yesterday was a disappointing trading session, and we broke some key support levels. Let's get to the other couple of points then. The FI as well in the index futures, they went ahead and they added short positions. 6,500 contracts is what they added. Short positioning continues at around 84%, though it's come off from around that 92.5%. It's come down to around 84%, though they continue to add shorts into the system. And now they're writing calls very, very aggressively, because in yesterday's trade, we just saw that they added close to around 1.5 call for every 1 put. So the writers were back in play in trade. And because of the kind of aggression we have seen on the call writing front, the PCR has come down. The PCR has come down to sub that 0.7 mark. It is at around 0.68. And we should get the 2 strikes up for you on the screen. The 25,000 call, massive open interest built up is what we saw. More than a crore shares getting added out there. But there is some glimmer of hope. The last straw that the bulls will be hanging on to is there were some signs of writing at around the 24,900 put, which tells you the 24,800 level becomes extremely important for today's trading session. You'll want the Nifty to, in fact, defend this on a closing basis, 24,800, 24,840 odd. While on the upside, the resistance comes in at around 25,100, going by the kind of writing we have seen on the call side. And the Nifty Bank, that yesterday was trying to show some kind of fight, but that gave it away as well. And now it's very, very close to the 20 DMA. You don't want this mark to get broken at all. That's close to around 400 to 500 points away from current levels. So the Nifty Bank will have to show some fight, given that the tech index has been under the weather. And let's see whether or not we're due for a bit of a relief rally on the tech index itself. That's down close to 5.5% in this week. Moving to one more point I wanted to make with regard to the margin trading funding book. Remember, that was at around 60 to 70,000 crores. It moved up to around 80,000 crores. Now it's at elevated levels at around 98,000 crores. And that's why you're seeing pain in the broader markets as well. So you'll want the headline index to get its act together, because otherwise, this will become a bit of a spot of bother, particularly for the broader markets. And finally, the stock that we're looking at, the one that we told you about yesterday, HFCL, was likely to come out of the F&O ban. That's precisely what's happened. So let's keep an eye out on this one for today.
Okay, all right. By the way, Asia is quite negative. Most markets across the region are simply carrying on from the weak close that we had on Wall Street. So even a market like Hang Seng, for instance, Hong Kong, is down about 1%. Japan is down. A lot of pharma stocks there, for instance, the likes of Daiichi, Sankyo, etc., all of them tumbling. And remember that yesterday there was a massive upward revision in US third quarter GDP. At an annualized level, it's at 3.8. So 3.8%, almost touching 4% that particular quarter. Maybe it was a sort of preponement of a lot of imports, etc. activity before the tariffs kicked in. But whatever it is, that's also gotten the market worried about how quickly the Fed can do the next rate cut. So that's the picture. Let's quickly get to the equity call of the morning. And it's coming in from HSBC. Herald van der Linde of HSBC says, while Indian equities have underperformed emerging markets by 32 percentage points since mid-September 24, the worst performance since 2001, we now find the market attractive. He says in cricketing terms, he expects it to return to form. He adds valuations have fallen. The premium to the region is back at historical levels, while lower inflation and easing measures should support growth. He thinks earnings are near the bottom and are set to improve. He says their 11 top picks would include names like Marico, Trent, Mahindra & Mahindra, Phoenix Mills, HDFC Bank, ICICI Lombard, Ultratech Cement, Infosys, Adani Ports, Divi's Labs and NTPC. So turning quite optimistic on the Indian market right now. That's HSBC. Well, let's take the discussion forward first on Pharma to understand what to make of this latest proclamation from the US president. We have Aditya Khemka, Fund Manager, Incred Asset Management, as well as Prashant Paroda, Portfolio Manager, Emerging Markets at Allspring Global Investments, join in to talk about this. Gentlemen, good to have you in. Aditya, if I could open with you, I mean, what have you made of it? Because very clearly, this new tariff is going to apply to IP-protected pharma products and to, not to generics. So does that mean a small sigh of relief for now? Or is the sword still hanging on pharma stocks here?
Yeah, hi, good morning. Thanks for having me on the channel. So clearly, most of the Indian pharma companies that sell into the US sell purely generic products. And hence, the sword, I would say, is still hanging, but it's not fallen on the neck yet. Because given the situation and given the rapidly changing situation, one cannot obviously rule out any kind of tariffs being imposed on generics tomorrow or day after tomorrow. The way things are evolving, one just cannot say anything regarding how the future would look like. But yeah, only I think a couple of Indian pharma stocks like Sun Pharma, maybe even a Wockhardt. So Sun Pharma obviously has a strong specialty branded franchise in US, and that may get impacted by these kind of announcements. And Wockhardt, most of the valuation of Wockhardt stock hinges on a specialty product, which they are, supposedly going to launch in US once they get approval. And hence, that kind of a risk also prevails for a Wockhardt. So in summary, I think the future looks uncertain for generics as well. But for now, the impact is purely on the IP-protected products.
Well, and this is just coming in, Aditya, but you're saying that from a company, and we should put the flashes out, you're saying that some impact, now we're not quantifying for Wockhardt, Sun Pharma, Aditya, right? These are the two?
Yeah, these are the two which have, a meaningful specialty valuation built into their market cap today.
Right.
So these two, I think, would be the ones that would have a significant impact.
Aditya, would it be possible? I mean, I know we can't push you for exact numbers, but Sun's, large pipeline is specialty. Now, we don't know if every drug gets impacted or not, but any way of wrapping our heads around this? What percentage of their, say, FY25 revenue could be at risk of these higher tariffs?
FY25, yeah. So FY25, I think around 20% of Sun Pharma's revenue in FY25 came from specialty products, but that is global specialty revenue. So a certain percentage of that, a very large percentage of that would be coming from US. I don't know, maybe 70, 80% of that may be coming from US. So, in summary, about 14, 15% of Sun Pharma's total top line might be coming from specialty US products as of now.
Overall, I remember about 20%. But the specialty could be about 14, as you say. Aditya, the tweet, the post says branded or patented pharmaceutical products. This is, the specialty would fall under this, right?
Yeah, specialty would definitely be under IP-protected products.
Okay.
Under branded, you could potentially have some biosimilars as well. Because biosimilars, even though they are sold like generics, but they do carry their individual brands. So that is where I think even a Biocon may be at risk, where, they sell a lot of biosimilars into the US, which are branded products, but are not...
Aditya, we just spoke with the Biocon CEO a few days back on the fact that they are, constructing this facility in the US, manufacturing facility, right? And the post says that if you're building a plant in America and building is defined as breaking ground or under construction, then you're exempt, right? So then Biocon is exempt, right? Then in that sense, the way this is worded.
Yeah. So look, this is where the gray area is, right? I mean, the regulations aren't clear. They might change it in 24 hours, like they did the last time. So I don't really know, but what I'm just intuitively thinking is, let's say if Biocon manufactures 20 biosimilar products in India and sell it to the US and creates manufacturing capacity for one of them, or just break grounds or create enough manufacturing capacity for one of these 20 products, then is all 20 products still exempt? I don't know that. And
that we don't know. Only for stuff made in the US or, planned to be made from the US or everything, right? Once you have, so absolutely.
Yeah.
Now, second question, we're talking about direct impact, right? Companies selling into the US. Let's talk about the second way to look at this, which is US large pharma companies, big pharma basically, the Pfizer, Eli Lilly, Roche, etc. Most of them are making or have announced plans, broken ground, whatever, in the US. They fall under this category, this exemption that has been, the way it's been worded. So let's just assume for a minute that, not very large impact on them because of this, the way it's been put. Is there any second order impact from them, their sourcing through, from India, from China, etc.?
So, look, manufacturing again, so pharma manufacturing has multiple steps, right from the intermediate to the API, to the formulation, to the packaging. So if I break ground to create a packing line or a packing facility, get the product out from outside and just assemble the product in the United States, pack it up, does that qualify, under this? Again, lack of clarity in the regulation just doesn't, we don't know how it will impact them. And hence, how does it impact the ancillary industries feeding into them is something that is very difficult to quantify or assess. And that is where, we are struggling a little at this point.
Okay, just one more question. Does this announcement now, and we'll wait for clarity, a lot of stuff is not known, does this increase uncertainty or reduce uncertainty? And the reason I'm saying there is even a second option, which is reduce uncertainty, is because this says, it specifically says branded, patented pharmaceutical product. So if they had to be generic, I mean, one way to look at it, maybe the positive way to look at it, it would have been here already.
Yeah.
Right? So in that sense, does it reduce uncertainty for generic players?
Yeah, so two ways to look at it, right? So originally when the tariff started, pharma was exempted. Now suddenly branded pharma is not exempted. Now one way to read it is to believe that, okay, now that branded pharma is not exempted, unbranded is exempted or continues to be exempted. Tomorrow, if this doesn't create enough of an impact and they start, tariffing the unbranded products as well or the generics as well, then, I don't know how that can play out. So in my view, in my personal opinion, I will not touch, this business as an investor till I get 100% clarity on what the tariff situation for these businesses will be.
Okay, all right. Aditya, stay with us. Let me get Prashant Paroda in. He manages a large amount of money here in India and in emerging markets as well, Asia, etc. Prashant, good to have you with us here. You heard Aditya. Pharma is the big focus, of course, because it's a big industry here on the generic side. My question exactly is that, Prashant, what I asked. This increases uncertainty. You heard the entire conversation, so you know the context. Increases uncertainty or reduces uncertainty?
I think for the generic players in India, even if you expect some little bit of tariffs, it won't be as high as these branded players. Generics are part of the solution to the overall healthcare costs in US. And my sense is even if the tariff rate will come, it will be at a much lower rate than these branded generics. So the uncertainty is that we still don't know the number, but hopefully the number would be much lower than what's in this case.
This is Section 232, Prashant? Those sectoral...
Yes, most likely it will be Section 232. Yes.
And you would expect, for no other sector have you seen, two posts. It's one post. I mean, that's what we're come down to analyze what comes next, right? Branded generic, branded pharma.
He has been hinting. Yeah, he has been hinting. President Trump has been hinting on pharma tariffs coming, and I think there was some expectations. Clearly, the amount wasn't known. And now I guess there's some clarity, at least for the branded part.
Gentlemen, morning to both of you, morning to Prashant. Prashant, overall as well, I mean, I think a lot has changed, right? There was this glimmer of hope when it came to India-US ties and the trade deal, and there was a pleasant exchange of social media vibes, right, around Prime Minister Modi's birthday. But since then, the rhetoric around Russian oil continues, and we've seen what we've seen on Pharma now. So what's your sense? I mean, if this market is waiting for a positive trigger, I mean, it's got it in the form of GST cuts or, easier monetary policy, income tax cut. What could be that next positive trigger? Because this whole US situation till now hasn't shown any signs of resolving.
Yes, on the tariff front, at least for the secondary tariffs, it looks like the US situation is definitely hardening as well. And today, I guess the Turkey's president was there as well. And President Trump did point out that Turkey can help out if it stops buying gas and oil from Russia as well. So it seems to me that something is brewing, especially with Europe, in terms of tackling, the oil and gas situation. And my sense is, at least the good news from India's perspective is that they've started talking again. And, our commerce minister was here, and there is some dialogue going on. So ultimately, I think it will come out to some kind of negotiation.
No, Prashant, what I was, I completely take your point. I'm saying we can't second guess those geopolitical developments, right? They'll happen as they happen. My question was for the market. What can now make it sort of revive? Because from a policy front, a lot has happened. So are you expecting better earnings? Anything else that can get us out of this slump?
Yeah, I think from the India perspective, right, the government has done what it could. From the RBI also has been cutting rates. There is kind of the GST impetus. So I think people will overlook whatever this quarter earnings are and focus more on how around Diwali, kind of how some of these auto sales come. But from the valuation perspective as well, China has moved up quite a bit. So looking into next year, given the underperformance of India, I think if the earnings come through, and it might not be in certain sectors, but might be in auto or financials, we will continue, I think, to rise. With the market will continue to do well from there.
Yeah, no, absolutely. Aditya is still with us. Aditya, your last comment was you would not touch any of these names as an investor, right? That's what you said.
That's correct.
Yeah. And nothing at all. There's too much.
So look,
till this uncertainty clears.
Yeah. So when these things happen geopolitically, your risk exposure to risk just goes up, and for the reward to go up in commensurance with that risk, the stock prices need to correct, so that my potential reward also goes up while my potential risk has gone up. We just haven't seen that kind of correction in stock prices yet to say that the reward has gone up, in accordance with the risk that I need to take now. And hence, as an investor, I wouldn't look at it.
Got it. We'll leave it there. A good conversation right on top, and pharma focus really. Tariff focus, I should really say. Aditya, thank you for joining us on short notice. Prashant, thank you very much for running us through the overall foreign investor perspective on this. We'll take a quick break, but let me just, before that, quickly run you through what's coming up here over the next 2.5 hours. Interactions lined up, basically. 8:30, we have another focused discussion on pharma tariffs, and that's a big talking point, right? So the analyst from Elara Securities will be with us. On at 9 o'clock, we'll have Balaji Subramaniam of IIFL Capital Services for a discussion on the Vodafone AGR case. Remember, the hearing is today. The government's supposed to take a proposal to the Supreme Court, and the court said that let's find a resolution. 9:35, focus on, pharma. What else? Wockhardt. Aditya mentioned Wockhardt perhaps is impacted a little bit, so lots to talk about there. That's an exclusive, followed by CS Vigneshwar of Federation of Automobile Dealers Association and Vignesh Gulati of United Automobiles for a discussion on the auto space and what's sales numbers, etc., looking like post-GST cuts. And 10:15, Lata will be quizzing CNBC-TV18 citizens and MPC on whether RBI should or will cut rates on the 1st of October. So that's the star-studded lineup.
Time to slip into a short break. You got a lot of stock-specific action to track for you in a special top 10 segment. I'll run you through the list. We'll look at L&T, Tata Motors, TVS Motor, Polycab, Wockhardt. They'll all be reacting to positive news flow. Add to the list Supreme Petrochem. On the flip side, tech stocks and Pharma, Vari Energies, Ather Energy will be reacting to negative news flow. Take that break, come back into further detail on all of these names.
Welcome back. So, as we've been telling you, the cues across the world are not that great. US had a negative close, 0.5% lower on Wall Street, and Asia has exactly taken off from it. So, most markets around our neighborhood are down and down quite a bit. Look at Taiwan, down about 1.5%. Hong Kong's low. Let's pull up the implied open and see what the SGX Nifty, the GIFT Nifty is suggesting. How we will start 17. That's not bad. Let's see. But the market has already fallen a lot. Remember, yesterday we tumbled well over 150 points. So, maybe won't be that badly hit at the start, at least. Let's get to stocks. You already know that Pharma, and we'll get Ekta in to talk about that. But there are other names as well that we should be keeping on our radar. So let's bring in the whole team, guys. Morning to all of you. Look at Ekta, bright shade of green, no matter the gloomy talk on Pharma. We'll get to Ekta in a second. But Rima, you go. I mean, IT is never out of focus as well when it comes to the US business. And Cognizant reported numbers yesterday, guidance. What do you make of it?
Well, it's Accenture which reported their numbers overnight. And yes, IT has been focused. It's down 5.5% so far this week. And year to date, the stock is down. I mean, the index is down close to about 20%. But there is more bad news because Accenture, which is its peer, reported their Q4 numbers, FY25. That was a good set of numbers. But what the street is disappointed with is the guidance. And that's the reason why, while Accenture share price declined 3% on NASDAQ, even the ADRs, Wipro and Infosys, slid close to about 2 to 3% respectively. Now, Accenture is saying that FY26 revenue growth will be 2 to 5%. This is lower than the 7% that they clocked in the prior year. Two reasons for that. One, Accenture used to get about 8% of the business from the US government, and on the back of the federal government spending cuts, they will be losing. There will be a negative revenue impact of about 1 to 1.5%. And secondly, the inorganic revenue contribution this year will be lower versus last year. So this year, acquisitions will only contribute about 1.5%. But in a nutshell, what we're looking at is the organic revenue growth to be very modest for Accenture, 0.5 to 3.5%, low single-digit kind of revenue growth on an organic basis for Accenture, and this is what has spooked. But separately, two other internals, there are lots of them, but two other internals. One, on generative AI bookings are very strong, $1.8 billion for the quarter gone by, nearly $6 billion last year. And the company has also announced restructuring. We had heard that with HCL Tech 2 quarters back, and now even Accenture is talking about an $865 million workforce restructuring. Basically, they're saying that we will be making new hires this year, but some of the talent which cannot be staffed on the new tech, on digital, etc., we'll have to let them go. Back to you.
Thanks, Rima, very much for that. I stand completely corrected. I think too much news flow, too much to digest. So I read Accenture as Cognizant, my bad. But yeah, that's important takeaways coming into my
Well, that's right. Let's move on then. Let's get in Vivek. He's here to talk about L&T. Hey, Viv, good morning.
Well, good morning. In what has been a drag on L&T's financials for close to half a decade, an important development. PTI reports that the Telangana government has offered to take over phase 1 of the Hyderabad Metro Rail project from L&T. Now, the government will pay close to 2,000 crore for L&T's portion of the equity stake, and along with that, will take over the debt completely. Remember, the debt is of close to 13,000 crore rupees. This 2,000 crore equity that L&T is receiving is against the 5,900 crore that they had originally asked. But what this move basically indicates is that a significant overhang as far as L&T was concerned now moves away. We also have JM Financial that has written on this particular development. They say that the exit potentially removes the long-term overhang on the stock and is modestly EPS accretive. They say that the exit from these assets avoids PBT PAT loss of close to 626 crore at L&T's level, and an EPS uptick of close to 4% is what L&T could enjoy. Remember, losses were at 3% of L&T's consolidated PBT and approximately 4% of consolidated profit after tax for FY25. It's further positive given the fact that it can boost ROE by close to 60 to 70 basis points. We reached out to the management of L&T. We're yet to receive a response from them.
All right, when things go right, things go right in a big way, right? And they continue to keep going right. Cycles. L&T, of course, has been has benefited a bunch of things going right for the last couple of years. Stocks, watch out for it. It's a positive. Material one, as Vivek points out. Tata Motors is the next one. Was a top Nifty loser yesterday. Hormuz is here with more. Hormuz, over to you.
Morning, Prashant. And important clarifications being issued by JLR in the queries that CNBC-TV18 had asked them. And they responded to those queries, mentioning the fact that they have begun phased restart of the operations. There are sections of digital assets that are now up and running. The global parts logistics centers has returned to full operations. And the financial systems that processes the wholesale of vehicles is now online, which will enable the faster registration and sale of vehicles to the clients. But two important issues on the insurance bit, they mentioned that they do not comment on commercial matters, and on the financial bit as well, they mentioned that they will update on the same in due course of time based on their financial reporting standards. So although there are some operations that have come on stream, clarity still awaited on whether the production will actually begin on the 1st of October. But since the stock is beaten down, they'll latch on to some positive news. Expect some green here today.
Okay, all right. So some good news for Tata Motors. Finally, thanks for that, Hormaz. Now let's get to Ekta and understand how, what the potential impact could be of this tariff news on Sun Pharma. Ekta.
Thanks very much for that. So just want to start with the news that Trump has announced 100% tariff on imports of branded and patented pharma drugs. So that means that majority of the Indian companies that do produce drugs right now are generic drugs. They basically are copycats of the patented drugs which have gone off patent in the US. Now, however, why is Sun Pharma in focus is because Sun Pharma has a segment of drugs which they sell in the US, which is basically specialty drugs. Now, specialty drugs consist of Ilumya, which is for psoriasis, Sequoia, Odomzo, which is for cancer, Winlevi, etc. So these are a couple of the drugs which they have on in their specialty branded portfolio in the US. That is currently 19.3% of Sun Pharma's sales. FY25 specialty sales were $1.2 billion. It was up 7.1% year on year. Global Ilumya sales, which is one of the key drugs for them, was up 17% to $681 million. And even Q1, they saw 17% growth in terms of specialty sales. Interestingly, this is what could possibly get impacted for Sun Pharma if in case there is this 100% tariff that comes through. Now, it's important to note that the company does not disclose the percentage of sales that they have from the US plants. They do have US manufacturing operations. They don't disclose how much they make from that. Now, in the Q1 call, one of the questions to them was that do you have to increase your onshore manufacturing? So Sun Pharma had indicated the current capacity that they have is good enough in case for the company to not undertake onshore manufacturing without adding new capacity. So this is what the indication was, that they seem to be okay when it comes to US manufacturing, enough to possibly appease the US government. Now, this is on Sun Pharma. We need to see the impact. We need to see whether Trump is also talking about fresh capacity coming on, because he said building capacity in the US. So that's another variable which we need to watch out for. Other stocks, other generic stocks such as Dr. Reddy's, Lupin, Torrent, Glenmark, all of them, they are likely to not be impacted. But why could they be lower today? Because of the fear on what Trump could do going forward. It is in his best interest to not impact generic drug prices in the US, because that's basically the key thing where drug prices are lower. But they could possibly impact it in terms of any kind of supply chain tariffs which could then be implemented. So I think these are a couple of variables we need to watch out for. Net, generic pharma should not be impacted. Sun Pharma should be impacted because of specialty portfolio. And what we need to watch out for is any kind of tariffs on the supply chain, which includes APIs. That we'll come to know over a period of time.
Beautiful. Thanks a lot, Ekta. Dr. Ekta, for putting all of that into perspective. And all through the day, Ekta will keep breaking that down for you. Thanks a lot. Well, let's move on and let's get in Vivek. He's here to tell us about Waaree Energies. Vivek?
Well, that's right. So, news agencies, multiple news agencies have reported the company is now under a probe in the USA and this is basically for evading solar tariff duties. Now, customs officials are investigated if Waaree Energy sidestepped US tariffs by actually going ahead and exporting Chinese-made cells and panels by labeling them as made in India. Now, remember, Chinese-made cells and panels are subject both to anti-dumping as well as countervailing duties in the USA at a much higher rate compared to India's exports. Now, this is in addition to, in August 2025, when the consortium of US solar manufacturing companies had gone ahead and petitioned for both ADD as well as CVD imposition of solar panels on Indian exports. So this is a double whammy as far as Waaree is concerned. Remember, amongst Indian solar module manufacturer makers, Waaree Energy has the maximum exposure in terms of the order book in terms of exports. Over 41% of the total order book actually is to the export market. Close to 20% of the revenue could be impacted. Expect some red on Waaree today.
Okay, all right. So we're going to watch out for this under investigation. Thank you for that, Vivek. Let's quickly move on. Hormaz is here. He's telling us about Ather and TVS Motors. What's the news here, Hormaz?
Ather has given out a clarification about the fact that they were also impacted because of the rare earth magnets ban from China, and they, as a result of which, had to deviate from the certain guidelines that were under the PM E-Drive scheme under the phased manufacturing program guidelines. Although this deviation is temporary, it has impacted their eligibility to apply for incentives under this PM E-Drive scheme for over 52,000 vehicles that have been made or are likely to be made in the future as well, and as a result of which they are likely to forego incentives of up to 26 crores, although they have mentioned that they have successfully developed a heavy rare earth free motor and have also received a testing approval from the testing agency for the same. So expect an initial red on Ather, and the stock might recover because of this development that they have highlighted. And on the other hand, TVS Motors has established a global center of excellence in Italy, and as part of this initiative they are going to acquire a 100% stake in Engines Engineering, which is an Italian automotive and design company, for around 5 million euros. The company is known for advanced prototyping, innovation in high-performance motorcycles, and some experience in MotoGP racing as well. So it's a positive development for TVS Motors in the European market. Expect some green there.
All right. Hormaz, thank you very much for that. More stocks with news flow. Vinny is here with those. Vinny, good morning.
Hi, good morning. So firstly, starting with Polycab. Yesterday, obviously, we had seen the stock price see a bit of a fall after the promoters sold that 1.5% stake. But the buyers, the marquee investors who have come in now, JP Morgan, they bought around 15 lakh shares. This is nearly 1% of the stake, and that is at 1,107 crores overall stake is what they bought. Other than that, we have other marquee buyers like Morgan Stanley, HDFC Life, Society General, Kotak Life among some of the buyers. So expecting some green here today on the screen for the stock. Wockhardt, that's another one we'll keep an eye out on. Lancet Regional Health has published a phase 3 study for nafstromycin, which is an important drug launch that the company has been working on. So this one in India will be the first antibiotic launch that comes in for this type of a drug in more than 30 years. So important one there. And for Wockhardt also, it's an important drug. Do not forget the drug has been granted a qualified infection disease product status by the US FDA as well. So that is why green expected here. Good study improvement that is showing for the drug. Lastly, Supreme Petrochem, they have commissioned around 90,000 capacity per annum that has been in two regions. One is obviously in Maharashtra, and other one is at that Amdoshi facility. So on the back of this, we could see some bit of a green for the stock as well.
Got it. Thanks a lot for that, Vinny. In fact, we have the management of Wockhardt who will be joining in later today at around 9:35 a.m. for more on the new drug and the US tariff impact. Time to slip into a short break. On the other side, Bino of Elara Securities will be joining in to talk about Trump's new tariff announcement on Pharma. Welcome back. Hope you're having a good Friday morning. Well, plenty of action with regard to the markets, and help us out with some fundamental analysis. We have Bino, who's here to help us out with how do you approach Pharma. And we also have Sid Kemka, who will be joining in to help us out with other stocks that will be in focus. Bino, let's come across to you. First of all, good morning, gentlemen. And thanks a lot for joining in. Bino, out of nowhere, Mr. Trump has got active in the wee hours of this morning, and he's talking about Pharma. Based on the feedback that we have got, it may not be such a big impact, at least as of now, but Sun Pharma could be the stock in focus. How do you read the situation?
Hi, good morning. Like most of the other tariffs, this also, as of now, is not going to cause a major disruption in my initial reading. Of course, the details of this are not yet out. White House has not yet put out a detailed statement or the text of the act that the president has taken. But what we understand from the tweet is that if a company has a plan to put up a manufacturing plant in the United States, it is exempted from the tariff. It is worth noting that the statement does not specify that the product on which the tariff is going to be imposed needs to be manufactured in that plant. So in that context, almost every large company, including Sun Pharma, has plans in the US.
Okay.
They would have plans to expand capacities, put up additional units in those plans. To that extent, most of the companies will get exempted from this act, is my initial reading. Of course, we will wait for details to flow through. Specifically in case of Sun Pharma, we also need to keep in mind if Sun Pharma's major products are finally getting shipped from Europe. Europe already has a trade deal with the US, which imposes 15% tariff on pharma. So it is a possibility that the tariffs on those products will be limited to 15%.
Right.
But what overrides what is something which we need to see once the final text comes out. As of now, I don't see any major risk to the earnings of any of the companies.
Well put, Bino. So as of now, what is your rating that you have on Sun Pharma?
I have an accumulate rating, which means it can keep on compounding from these levels.
So going by what we have on the plate right now, Mr. Trump can do anything. But if there is weakness on Sun Pharma, you would look at, the advice would be to go ahead and accumulate, right?
Yeah, if any significant weakness in Sun Pharma stocks, I would look at as an opportunity to accumulate the stock based on information available right now.
All right. Would it be too brave to think that generics get off the hook now since he's gone after branded? Would that be too brave, or would you? Some on the street believe that maybe there's a positive read-through from this. Would that be too brave?
Yes, I strongly believe that generics will be exempted because putting tariffs on generics can be disastrous for the US economy, the US healthcare system. Drug shortages can go through the roof, which can hit back at Trump's support base. So generics will remain exempted in the foreseeable future is my strong belief. And in addition, the tariff on the branded drugs, if at all some real, in select cases, very select cases, not across the board, could benefit generic pharma as well.
Okay. Bino, thank you. Just one quick question. Biocon, we spoke with the management of Biocon recently, and they said that they're building a plant in the US, right? So, is all exports into the US then exempt if you're building a plant for something in the US, or only what you build in the US in that sense is exempt?
What I understand from the limited tweet that has come out is that if a company is building a plant, its products are exempt.
Yeah, that's what I also
not
thought.
Specifically
yes.
The product. It is not specific to the product.
Yeah.
To that extent, if they are building a plant in the US, then its product should be exempted, is my understanding. But of course, we'll wait for the detailed statement.
Yeah. No, got that. And that was a sort of first reading that, I was thinking about how to put it, Nigel. Big pharma, tariffs, big pharma, little impact. That perhaps is how this is going to play out. And something like what's happened with semiconductors. Just go back and see what happened with semiconductors. Something very similar. But of course, with semiconductors, there was no impact here on India. And with pharma, at least there is some cross-connection with, but mostly it's all generics, etc. Thanks very much, Bino, for joining us bright and early. Siddharth Khemka is with us from Motilal. Siddharth, good to have you here. Let's talk about a bunch of other names as well. Pharma, we've done a bit. Tata Motors, I don't know if you heard Hormuz and Sudarshan talk about this earlier. Stock's been under pressure, the JLR impact. What's your sense?
Hi, good morning, Prashant. Yes, so I think if you look at Tata Motors, we have been a bit underweight quite some time since I think last 2 quarters we have downgraded the stock to neutral. And what we see is that JLR continues to face several headwinds, tariff wars, US depreciation versus some of the other currencies, and uncertainty over the EV transition. I think all those things continue, and on top of it, the strong competition from some of these Chinese players in other regions. So we believe that near-term earnings could remain under pressure. We have cut our FY26 estimates in the last 2 quarters, and we believe that given the multiple headwinds, we continue to remain underweight on Tata Motors, best avoided in the current environment.
Okay, all right. Sid, request you to stay with us. We'll slip into a short break. When we come back, we'll get an exclusive conversation with the chairman and managing director of HAL. Don't go anywhere.
Okay, welcome back. There's about 8 minutes to go for the pre-open session to kick off. What we're going to do is get you a very interesting conversation. By the way, the GIFT Nifty started to move a little bit more on the downside. About 50 points lower is what we have. Defense Ministry has signed a nearly 62,500 crore rupee contract with HAL, Hindustan Aeronautics, to procure 97 Tejas Mk-1A aircrafts for the Air Force. Our colleague Parikshit spoke with the HAL CMD, Mr. D.K. Sunil, who outlined the timeline for the additional 113 GE engines, along with, of course, addressing this news flow as well. It's a rare voice. Listen in.
We've already made an investment of almost 2,000 crores over the past few years. We have 2 lines in Bangalore producing 8 each aircraft. And the third line at Nasik, we've spent close to 700 crores to expand that and make it another line capable of producing 8. And the first aircraft will roll out this month from that line. But the point I would like to make, and which I'm very excited about, is that we effectively have a 4th line in the private sector, where the airframe parts come from the private sector. We get the wings from L&T in Coimbatore. We get center fuselage from VEM Technologies in Hyderabad. We get the center fuselage from Alpha Tokol. We get the vertical tail and the rudder from TASL, it's a Tata Group. So we effectively have a 4th line in the private sector. So this will bring our capacity to close to 30 in the next couple of years. And I think the investments that we have made over the last couple of years are now bearing fruit, and we will be able to meet the requirements of the airports in the time frame.
You said that you will soon, in the couple of years, have a capacity of making 30 aircraft per year. By when would you reach this capacity?
See, the private sector today has just started delivering. This year, we took the first delivery of the wings and the center fuselage from the private sector. My assumption is in a couple of years, they'll be able to give us maybe 6 to 8 structures in total. So in addition to the 24 that we have already established, conservatively, I would say we can get 6 from the private sector, taking it to 30 aircraft by 2027.
Right. Just to also ask you about the delivery timeline for the previous order of 83 LCA Mark 1A, Mark 1 Alpha jets that were ordered in 2021.
Yeah, the aircraft production has started. Today we have 10 aircraft on the flight line, which means they have been integrated with the engine, they have been test flown, and they are waiting for the engine. Today we have 3 engines, Cat A engines, that is brand new engines, and we expect another 9 in this financial year. So in this year, we will be able to deliver 12 aircraft. And as you know, the hold has been because of the engine supply from General Electric. And we expect 20 engines in the next year. So I think the production will ramp up from next year onwards beyond 12, and we will be able to reach those based on the engine supplies. Notwithstanding that, our plan is to build these airframes, test them with the Cat B engines, and get them ready. And as and when the engines come, we will be able to supply.
So you said, sir, one fighter jet you're looking to supply by this month, within September, and how many in October? Because there were some reports that 2 fighter jets will be delivered in October.
Yes, we have 3 aircraft which are ready with Cat A engines as of now. But we have some firing trials regarding the missiles, which is ongoing. So we expect that in October, we should finish these trials and be able to deliver this couple of aircraft in October. That's the expectation. But as of now, we have 3 aircraft with Cat A engines.
Okay, and you're hoping to deliver them by end October?
Yes, couple, because we have started those trials, and we are optimistic that once these trials are successful, then we will be in a position to deliver these aircraft.
I would also like to ask you that by when do we expect HAL to sign the follow-on order for more GE engines that will be required for the new orders that you have received? There have been reports that very soon HAL will be signing a deal with GE for 113 more engines. By when do you expect to conclude that?
We have already concluded the negotiations. The financial figures are finalized. We expect in a month, now that this main contract has been signed, before end October, we will be able to sign the contract with GE for the 113 engines. The negotiations and the price has been already finalized.
What will be the timeline now, sir, for the complete delivery of the 83 that were ordered in 2021 and now the 97 which have been ordered?
Yeah, the total orders, both the orders combined, is 180 aircraft. So we should be able to close this by FY 32-33.
Okay, some very, very specific takeaways and timelines there indicated by the HAL top management. We'll in fact discuss this and whether it changes estimates for shareholders at all after the break. Need to get into that quick break. Come back on the other side. Of course, we'll also have our technical experts joining in with some trading ideas. Welcome back. 12 minutes to go before our market opens out. Let's quickly, take that question on HAL with Siddharth Khemka, who's been waiting by patiently. Sid, so now we have specific timelines. The management is promising those engines are coming. I mean, he's just told Parikshit on the specifics as well in the delivery. The first of the aircrafts will be delivered in October itself. So will you be looking to rework any of your estimates on the stock? What's the call?
So, hi, Surbhi. I think, yes, that's a big clarity that is coming in. I think not only the new order of 97 light combat aircrafts that was already anticipated, but it represents a significant growth milestone for HAL as it reinforces the visibility of its long-term revenue stream and its positioning within the India's self-reliance in terms of the aviation sector. What we are also seeing is that deliveries are scheduled with the engines now getting delivered over the next few quarters. We are seeing strong bump up in October to December where 6 more engines will come up. So definitely we are working on our numbers. We were anticipating much of it already pegged into our numbers, but we see a strong growth in the near term as well. So it gives a lot of clarity for the near term. Long term visibility was there, which continues. And in terms of valuation, we see that compared to some of the other defense players, it is trading at a significant discount given these kind of uncertainties, which now gets away. And hence, we believe that HAL is among prime for a valuation re-rating candidate within the overall defense space. So we maintain a buy rating on HAL with a target price of 5,800, giving one upside potential of 20%.
Ah, 1,000 rupees upside from where the stock is right now. Got that. Okay, Siddharth, thank you very much. You have a great Friday. And thank you for joining in today. Well, let's quickly move on to the technical calls as well. Quick glance at the Nifty, down 119 points, by the way, in pre-open. So it is looking a little tough. Mitesh is with us along with Shrikant this morning. Gentlemen, morning. Great to have you in. Mitesh, it's looking tougher and tougher. What now? So we get this gap down. What do you do then?
Good morning, Sumi. So I think, the way we have kind of slipped in the last about 6 or, if you count today, it will be 7th session. We've broken the short-term averages, we've broken the near-term support. So the idea is that while there is still a chance of an upside happening, I think, one should wait it out till you see some kind of a reversal and the market starts to capture 25,100 again. If it doesn't do that, good chance that we'll see the decline extend to about 24,700. And that is my worry. I think, so the markets could be slightly more volatile in the days to come by. The Bank Nifty also, yesterday kind of just closed below that 55,000 level, just marginally below that. But closing below that was a slight negative. So the Bank Nifty, if it doesn't capture 55,100 immediately, you might see the Bank Nifty go down to 54,500 to about 54,400 range. And that means that next few days could still be slightly more biased on the negative side.
Mm-hmm. Okay, all right. Let's get to Shrikant as well. Shrikant, any Nifty trades today?
Good morning, Survi. I think, we believe that the markets are deeply oversold, and in such type of markets, we should look for taking some long bets very close to important support levels like 24,800 or 24,850. Today, maybe we may see the markets opening somewhere close to those levels, and after opening around those levels, we can expect a rebound in the market. That's my overall view. We were expecting market to stop around 25,150, but it has broken all the levels. And today, if we see the statistics of options, then based on that, the markets are completely oversold. At current levels, we should look for buying some stocks from the metal space. In that, Vedanta we like, which is around 461, 462. There we are expecting stock to move towards the levels of 475 or 480. It has been consolidating below the levels of 450 for a longer time, nearly 10 months. Now it is comfortably holding about the same, which is positive, and we can expect further more activity in Vedanta. The other stock on which we are bullish is Hindustan Aeronautics as well as Bharat Dynamics. I think this defense space should do well in the near term. In that specifically, Bharat Dynamics is showing a lot of strength. It is around 1580-85. There we are expecting stock to move towards the levels of 1650 or 1670 sort of levels. We can keep a stop loss around 1550 for buying Bharat Dynamics at current levels.
Okay, so going with some defense names over there. Mitesh, what about you? Stocks for the day?
I have a mix of buys and sells, 2 buys and 2 sells. On the buying side is Hindustan Zinc. It's broken out of a 4 or 5 day kind of consolidation between this 462 to about 450, 448. And that should mean possible more upsides to about levels of 480 to begin with, and maybe eventually higher levels. So buy here for a target of 480 and keep a stop at about 459. Also a buy on Oil India with a stop at 407. Here I would look for targets of around 430 in the near term. On the selling side, Blue Star, I think, after a good rally is now showing signs of profit booking and correction. So sell with a stop at about 1955 for targets of 1870. And FMCG pack, you've seen Dabur and HUL correct. I think Marico is on the verge of giving a short-term breakdown on the chart. So if it breaks 700, take a short with a stop at 710. Look for targets in the range of around 680 to about 678.
Right. Thanks very much for that, Mitesh. Appreciate it. Sudarshan, thank you very much for joining us with those calls. Just want to quickly look at 2 names. Sun Pharma in the pre-open. The pre-open is, by the way, finished. Let's just put up Sun, Wockhardt, maybe Lupin. Sun is down about 2.6. Look at Lupin. Wockhardt, 2% on Wockhardt, and Lupin, I think, is the other one. Maybe a bunch of others as well. I mean, you've got lots of listed and large and decent-sized companies out there. And we'll actually, let's just have the pharma stocks fall at the bottom in terms of the pre-open, in terms of where they've finally ended. So we'll do that. The other big story which we want to address, of course, is the Vodafone Idea issue, the AGR dues, right? Supreme Court is hearing a plea filed by Vodafone Idea today challenging the AGR demands raised by the Department of Telecommunications. Ashmit is here with more on this. Ashmit, take it away.
Well, a crucial day today as far as Vodafone Idea is concerned. The Apex Court is likely to give clarity on the way forward on the resolution of the AGR dues. I use the word resolution on account of the language being used by the centre in this particular case. Bear in mind, there have been previous occasions where the company has asked for relief. On those occasions, the centre's position, the DOT's position has been is that this is an issue best left to the wisdom of the court. This time, however, there's a marked change. The Solicitor General, in the previous hearing, which took place on Friday of last week, the Solicitor General had a very different language, saying that the government now has skin in the game, the government has a 49% stake, and that now there is a change of facts on the ground, which is why the centre now feels that there is a need for a solution. There is a need for the court to grant indulgence to the centre while it's trying to resolve this issue. So for the first time, the centre batting in defence of a resolution of the AGR issue. What that resolution is, what that entails is what we need clarity on. The Solicitor General, we understand, will be addressing the court shortly. This matter will be taken up shortly in the first half by the Apex Court, and that's perhaps we'll begin to get more clarity on what this roadmap to a resolution may look like as far as the AGR issue is concerned for Vodafone Idea.
Thank you for that, Ashmit. And, very nicely explained that change or the slight sort of shift in the government's stance is extremely important to note, what we saw last Friday. Balaji Subramaniam, Vice President at IIFL Capital Services, is with us. Balaji, thank you for joining in. We've had these discussions several times in the last, I think, couple of years, every time we're nearing a hearing. But like Ashmit explained, today is very, very important because it was all about a demand of, I think, 9,000 or 10,000 crores. But the way the case has been sort of argued in the court, Vodafone itself and now the government seems to be, indicating that this is much bigger than a supplementary AGR demand. Your thoughts on whether you would expect any sort of a breakthrough?
Good morning. Thanks for having me on the show. So firstly, the plea that is getting heard is on the 9,500 crores of additional demand that the DOT has put up against Vodafone Idea. And, while that is something which is additional to the 76,000 crore AGR liability that Vodafone Idea has got, I think the bigger picture has moved to whether, the Supreme Court officially gives some leeway for the government in terms of, taking any steps towards the resolution of the AGR matter. Because, the government is in a slightly tricky position because earlier we have had Supreme Court judgments coming hard on both the government and industry, saying that whatever was mentioned in the original affidavit filed in 2019-20, those are final and, they are not subject to any recomputation or change. On the other hand, now the government has 49% stake in the company and they're also committed towards ensuring a three private player market structure. So I think what the government is looking for is, some official clarity from the Supreme Court in terms of, the degrees of freedom that the government can exercise so that, they can start working towards potential relief measures. And as we have mentioned in the past, these relief measures could be either extending the moratorium further or extending the overall timeline of the payment of the dues itself, or it could be some change in the NPV of the liabilities. So there are multiple options out there, and each option would require a different degree of freedom. I think before the government wants to explore these options, they want, some written order from the Supreme Court, which kind of ensures them that, they are not acting against the past orders of the Supreme Court. So that is how I would look at it. So the tone has changed positively, but the think, one has to see as to what eventually the Supreme Court says.
Excellent points, Balaji. So from a shareholder perspective, some of the options that you laid out, I mean, the government's made it very clear that they're not looking at taking majority control of Vodafone Idea. They're not looking to cross the 50% threshold. The other options that you laid out, maybe just simply extending the moratorium period, extending the repayment timelines, to what extent would they help? Which of these options that you just described would perhaps really give the company a fitting chance at some sort of a revival?
So I think if the moratorium is going to be only for a short period, like 3 or 4 years, then that won't really change things, because it is just merely postponing the problems to a future date. And again, we will reach the same situation that we are today after 3-4 years. And 3-4 years is probably too short a timeline for the company also to turn around its operations. So I don't think the cash flow issue, even with some moratorium given for a short period, like 3-4 years, will completely solve the matter. Then the other option could be that...
Balaji, I have to interrupt you. We have, we got the gist of what you're saying. Thank you very much for joining us. Apologies, we're just hitting market open, came to you late, our fault. Thank you for being here on the program, though. 24,840, 24,850 is where we are at on the Nifty. The Nifty Bank is starting about 0.28% lower, 54,840 or so. You've got the sensex down about a quarter. You've got the small cap index down about 0.17. The mid cap index is down about 0.15% as well. More down than up is what you have. About 1,000 stocks are lower and about 700 stocks are higher at this stage. And Nifty losers are all at the bottom of the screen. But we should have a plate on all the pharma stocks specifically as well. Sun is there. Dr. Reddy's is there amongst losers. And Cipla is there as well. More down than up. But nothing dramatic, right? It's been a drift lower. The market yesterday on the Nifty at least broke some key averages. We'll have to see. 24,800 is the 61.8% retracement of the entire 1,000-point rally that we had from 24,400 to 24,500, 25,500 or so. So 24,800 by close, I think, is a level to watch for a confirmation one way or the other. So it's about 70 points lower to begin today's session. Surabhi.
Okay, let's take a look at what's down this morning. On the lower side, Sun Pharma straight away. The cut is about 5% as of now, 4.7% to be precise. The others have also been dragged lower. Cipla, Dr. Reddy's. Remember, it's the issue was sentiment and overhang. I mean, could it be, in some form, generics next? Could there be something more coming? And that's what's weighing on the entire pharma side of the market. Apart from that, some of the other names that are weak include Bajaj Finance, Shriram Finance. The NBFCs are starting lower. ICICI Bank is lower by about 0.8%. IT is in no great shape. TCS, Infosys, all on the red side of the screen. Wipro is lower by about 0.5% as well. The Accenture guidance is not inspiring too much confidence about the next couple of quarters. So that's where the cut is coming in. Some of the consumer names like Nestle and Titan also slightly lower. Even Trent for that matter. So consumer, IT, pharma, all on the lower side. Let's see what's working. L&T up 1.3%. BEL is continuing its good form from yesterday. Maybe we can also put up Hindustan Aeronautics. The stock yesterday was up just about 1% or so. Now it's up about 0.5%. And of course, metals have had a great week so far, and that story continues. JSW Steel, Hindalco still flashing a little bit of shine on the green side of the screen. Nigel.
Well, that's right. A few stocks that are deserving special mention. Finiotex Chemicals ahead of that board meet that they have scheduled. Stock is up 4.5%. Right. That stock, in fact, comes up in the screen. They bagged an $18 million order from South Africa. For the time being, big return. Size of the order not too large, but the street seems to be enthused on that one. So that's why you have RITES. That's up close to around 5.5%. Big move is what we're seeing. Bottom of the screen, Titan is calling for some attention. Massive large trade out there, 0.7% equity changing hands. We'll keep an eye out on that and try to get you further clarity on that front. Polycab, yes, we had JP Morgan Fund, MS, HDFC Life among the buyers as the promoter sold close to around 1.5% stake. So that stock as well comes up in the screen, holding with mild green as we speak. What else? Sun Pharma is under pressure. You have Lotus Laboratories that's under pressure. They're coming up in terms of the top losers on the downside. So both those two stocks should come up for you. Actually, the Pharma index itself is under the weather, but going by what all we have, it'll be interesting to see whether or not we do end the low point of the day. We saw sentiment got hit on the tech space, and that index hasn't recovered all of this week. So let's keep an eye out on both those two indices. Prashant.
Well, that's the lay of the land, right? It's down about 0.3%. And we've sort of continued on this slow drift lower after the high that the market made at about 25, what was it, 500? It was a nice 1,100 odd point move that we had. More in a bit. Sanjay Parekh is with us, founder and CIO at Soham Asset Managers, someone who looks at companies bottom up and has good ideas all the time. Not all the time, Sanjay, maybe overstating the case. But great to see you bright and early.
So you 19 and Surabhi.
Absolutely wonderful. Sanjay, talk to us a little bit about this pharma business from the US. We've had a couple of analysts join us from the morning.
Right.
And, I was taking the opposite side, maybe just as a little bit of devil's advocate, but maybe angel's advocate, that maybe this removes overhang because he's done on pharma, it's branded, it's big pharma, he's not touched generics. Of course, I mean, you can always argue what stops him from targeting generics next. But from a stock point of view, just thoughts and your way of looking at it.
Yeah, I think, let's start with what happened in IT, right? You suddenly saw a notification on the H1B raising of 1 lakh on the incremental issues of visas, H1B visas. So the direction is clearly not in the right context. Like, they are trying to do something quite ad hoc, which is very unpredictable. And it's very, very difficult to predict what will happen to these global businesses. So I think market is nervous on that. Rightly, this is for specialty exports from India to them. I mean, it's not about a generic. But, he also made a statement a few weeks back that the prices there are very, very high and they need to be slashed down. Now, if that happens, then obviously they will tell the generic pharma companies to take some part of the pressure. So I think that uncertainty is what is reflecting in the prices right now. And it's rightly so, and it's very tough to take a view in the near term.
Okay, hi Sanjay, good to see you. So pharma things are still up in the air. But, one sector where you were relatively more overweight, I think, was autos, if I remember correctly, Sanjay. And that's played out very, very well. Your portfolio will be looking much better because of that. What do you do now, though? The stocks have, seen a good run in the last 45 days since that hint came in with regard to GST rationalization. And now we're getting into the strongest consumption period. How do you approach this sector since you were as is overweight?
Yeah, we are overweight and it helped us. So Maruti helped us. Mahindra, we were all throughout positive, almost now for 2 years, which worked very well. And then, while Samardhan Motherson is a global company, but we really like their aggressive expansion strategy and the unlocking they can do. I mean, there could be near-term concerns, but genuinely we believe this could be one of them which can meaningfully, what we call as can double in 4 years. Then this is one company we like, despite it being global. And of course, we had some Tata Motors. We took a knock because of this unforeseen event. While we were okay with the near-term issues, this is something which will be hitting them for a while and causing pain in Q2 and also maybe Q3. But overall discretionary space, we were positive. Now, I think, they're not like Maruti is not cheap. We own it, but, the whole thing is earnings will be minor upgrades from 4, 5, 6% volume growth to 7, 8%. But the valuation re-rating has significantly moved up from 16 times to 18, 20 times. So they're not cheap now, right? So we'll hold on, but we are now cautious. We'll not book profits yet, but we'll not buy.
Hi, Sanjay. Good to have you on this Friday. So this pharma, there is IT. Those US hits keep coming, right? Even H1B visas. Same time last week, we were talking about IT. But I think as per what I remember from around March, April levels, you had some exposure, not much, but some exposure to some large cap names as well. I'm not sure if you've pared that down, if you've sold it. What's the stance been? And are you looking at a different form of services? I mean, these digital businesses, the likes of your urban company, Eternal, etc. What are you doing there?
So I tell you, IT, we are underweight now for 3 years. We had Persistent and Kofod, but luckily we sold off because we really found that there could be uncertainty. And luckily before this thing, we own Infosys because we don't go zero on a sector like IT, and we are underweight with Infosys with a mild overweight, and that is hurting us. In terms of the new digital piece, we've evaluated each of them. We held on at one point, PTM, delivery, but we find them very, very expensive, So like Manish said, these are like Hussein paintings, where you need to buy at any price. We think we agree to that, and we're really finding very difficult, given our style of car, our valuation of a portfolio is 14 times. But consumption we like telecom, we are big overweight. We've got Indus, we've got Bharti, we've increased. So we will play consumption through those pockets.
Yeah, this is a very interesting. First time I'm hearing stocks being compared to MF Hussain paintings.
It was so nice, so right also, right?
Yeah, it's just there, right? You got to take it or leave it in that sense. Actually, my next question was telecom and Indus, Sanjay, which you find attractive, right? It's moved up a little bit, maybe 10% off the lows or something. And today, by the way, the case is being heard in the Supreme Court. I remember a lot of people were asking how is this hearing different compared to all the previous hearings, because the court has been very clear. And we spoke to a lawyer who gave an interesting angle. He said, this time, it looks like so far they followed the DOT's recommendation. This time, the government seems to be stepping in and saying, well, we want to maybe come up with a proposal to resolve this. And that seems to be the difference in that sense. So it's important for Vodafone Idea, but I think also for Indus.
Yes. So, Bharti, I just take Bharti. Bharti is a structural play. They will increase the market share. Even if Voda exists in a weaker form, it will still, Bharti can genuinely do very well in 3-4 years, right from ARPU increase. Clearly 60% of the increase in ARPU is falling on the bottom line, revenue market share increase, the subscriber gain, and of course the other businesses now like data center, they are very, very large players. So you will see some of this unlocking of those sub-values in digital space by Bharti in 3 years. Near term, it is not that cheap, but we will hold and we are overweight. We want it through partly paid. Indus Tower, our thesis is from a Vodafone perspective, first, from a Vodafone Idea perspective, I read the whole judgment, and while, what we think is, it's difficult to first predict what the judgment could be, but the government stand is clearly towards let's, and they have been saying that we need a 3-4 player market, including BSNL. So we think that, there certainly can be some relaxation in terms of the payment tenure. I am not very sure about the liability getting reduced, but it is difficult call. But the government intent that Vodafone should continue itself, I think, they will certainly want, with the help of judiciary, to make some rule. But also we believe that it's a very tough road ahead with a debt of 2 lakh crore. Let's say even if there is some reduction, it still would be, later on deferment. So it's going to be a tough scenario for Vodafone to move ahead. But from an Indus perspective, even if we take, let's say Vodafone, from an Indus perspective, Vodafone goes belly up, which I hope it doesn't happen. Those towers will be required by somebody, right? So if Vodafone's EBITDA contribution to Indus is, let's say, 5,000 crores, it will not be zero. It will be 2,000-3,000 crores. So even if you reduce that, and we like the strategy recently on Africa or the solarization of towers, and we believe the growth rate will get better from 6-7% to 12-14% for Indus Towers. And it's an absolutely net cash company. So there is serious value, a little bit of growth, and we could see re-rating. So we've taken a bet that, Vodafone in a weaker form will help Indus. And then if it gets stronger, great. And it's really cheap at 5.5, 6 times EV/EBITDA.
No, so you own it? Indus you own, but Vodafone you don't own, right?
No, we don't own Vodafone.
Yeah.
Indus Towers?
Yeah. Yeah, all options are on the table, right? And we've all seen the previous cycles. We've seen debt getting converted to equity. We've seen banks starting to own highways and power plants, and anything's possible. Anything's possible when people decide to get down to it, as long as it has the court's blessings, right? So let's see what comes up. Promises to be an exciting day. Okay, very quickly, entering the last leg of our conversation, consumption. You mentioned that that's something obviously you're looking at. It's a very wide basket. So can you give us some specific names? What are you most optimistic on here? Which side of consumption? I'm asking X of autos, that we've already discussed.
Yeah, so X of autos, we have telecom, we think is consumption. Bank, financial, retail credit is consumption. Housing is consumption. But we don't own FMCG. Because FMCG, it's worked for, again, 3 years. Interim, it does give us some pain. But we genuinely believe that even after this GST cuts, it's going to be taking a while before they get back their volume growth rate. And we are actively open to watching it, but we still feel valuation on implied growth are still very, very high compared to what they've delivered in the last 5 years. So we are zero on FMCG right now. And we are looking at each of the large players, Trend, Titan, but we don't own them. At a price, maybe we'll consider.
So that's FMCG and nothing else on QSR, on your footwear and value retailing, none of that?
No, we don't own them. Value retailing also is very expensive, 70, 60,
No value in value retailing, huh?
Absolutely.
Okay, got that. Just overall, Sanjay, I mean, the market as a whole, I know we ask this question all the time, but earnings have to move up, right? Are you optimistic that we'll actually see double-digit earnings growth this year?
Right. So I'll tell you bottom line. What we are doing, we have some capital in our AMC. So we are systematically investing every month. Because I think from here on, and we are telling that to our clients also, the second quarter is going to be weak because all the reasons we know. We are watching third quarter outlook, which is very important. But I really feel that the time correction and price correction, time correction has happened. Price correction could be there, and 2-3 months more and 3-4% lower is the maximum risk we see. And I really feel that third and fourth quarter will see slow recovery. And then FY28 is what people look at. And if we take 14-15 rupees earnings by then, and these are on broad conservative estimates on 27-28, India will still, I feel, get 20 times. That's 29,000. So that's 18%, 16-17% in 16-17 months. So I think a 3-4% lower and some time correction, and I think bottom of stock picking should start.
Okay, all right. 120 points lower is where the Nifty is at now. Sanjay, thank you very much. It's a fantastic discussion, and so glad you're with us here this Friday morning. Have a good weekend.
Have a nice day.
And talk to you soon again. So, by the way, the market's now below 24,800. I can show you this visually, and we'll try and do that. Basically, that entire 1,100 point move has been now retraced, which basically means that, that was what 24,800 was. I mean, either you were continuing that up move or, that up move was ended and a fresh impulse, maybe lower is begun. And you're right there as we speak. So we'll have to take it step by step. 24,770 is where we find ourselves at. And the market, by the way, has moved a little more decisively lower. And look at market breadth. Yeah. 2,100 stocks are lower, and we've got about 400 stocks which are higher. So it's 5:1 slam dunk in terms of declines. 2 advances right now, Surbhi.
Absolutely. And we've, of course, been reaching all kinds of levels in the downside. That's how it's going. By the way, on the pharma stocks, there's a mild recovery. Let's just add that. For instance, if you look at a Sun Pharma, which opened with a 5% cut, now there's some pickup from the lowest levels. The pharma index is still down, but Sun is, trying to fight back to some extent at least. Speaking of pharma, let's get to our next conversation. And Wockhardt is the company on our radar. We have Mr. Khurakiwala joining in. There's so much to discuss, including the company's own plans and some positive developments around some of the drugs that they're developing and discovering. So great to have you in. But we first, of course, have to get to the overnight news, right? Just a couple of hours back, this 100% tariff on branded drugs, as well as on anything which is IP protected. Let me just start right there, sir. You, of course, decided to get out of, US generics earlier this year. But then you are developing a lot of the other, branded drugs or specialty drugs, perhaps with the hopes of getting back to the US market at some point in time. Now, do those plans change with what has happened?
One of the important things is all our new molecules like Zenec, which we would be going to US as our first drug. The product is entirely manufactured in Europe, and therefore it will not be covered by Indian tariffs, and it would be covered by the European tariff. And we have to actually assess the impact of that when we introduce it. But overall, we don't believe it would have a significant impact on the business proposition which we have for Zenec in USA.
Okay, so you don't think it will have a significant impact? Since we're talking, specific to that drug, Zenec, what were the timelines that you were working with in terms of development, and how critical would the US market be in the scale-up and the sales of this particular drug?
We would be filing to US FDA sometime next week. We would be filing Zenec next week.
But sir, you don't. Where is the drug being produced? Because the order seems very clear that the tariff is going to be there 100% unless there is manufacturing in the US.
It is getting produced in Europe. So if it is getting produced in Europe, I do not know the tariff position. Is it even in Europe? It is 100%. But our product is getting manufactured in Europe, and we have to assess the impact of the tariff. But this will affect most of the drug because major part of a new molecule are also manufactured in Europe and other countries.
Mr. Khurakiwala, good morning, sir. Prashant here.
Yes, Prashant.
The way it's all on the back of a social media post, right? That's how this is being conducted from President Trump. So details, etc., we don't know. We've been talking to analysts. The other question is, for example, in semiconductors, similar thing was announced. All companies said we are investing so and so, so and so, so and so. How much will happen? We don't know. And then nobody's tariffed anything. So, and here also, the post seems to suggest if you're breaking ground, if then you're exempt. So I guess most companies will rush to announce something, and that seems to be the target, right? That seems to be the motive for doing this, Mr. Khurakiwala. My question is there a way around this by doing exactly that?
I'm sure, once we understand the whole subject, one need not have to take up at the face value of tariff.
Correct.
There are approaches and methods available where overall one can reduce significantly the impact of tariff.
Yeah. Is there a broad thinking that maybe, and the other question is if you announce something in the US that are only what you make in the US exempted, or what is coming out of Europe also or elsewhere also exempted with one manufacturing base in the US, does that mean that everything that you send into the US is exempt? That clarity is also not there.
So it's very difficult for me because I have not read this latest news of 100% to comment anything on that front. But I must tell you that all our new molecules are not manufactured in India. They are researched in India, discovered in India. They have a global clinical trial, and mostly they are getting manufactured in Europe.
This will not, if this stays, right, and this doesn't, there is always a starting position and then it kind of comes down and it's negotiated lower, and hopefully it will.
Yeah, we are looking at about 18 months to 2 years period before our first drug would be in the market.
Exactly. And by then the situation could be different.
What happens during the meantime?
Yeah. Now, let's just assume for a minute, this is all theoretical, that it does not. Would you look at, you said there are ways to mitigate it. So, for example, you license this to somebody making in the US. I mean, is that what you had in mind in that sense?
I cannot comment on it at the moment. We will have to examine both from a business strategy point of view and a tax planning point of view.
Mr. Khurakiwala, before we move to other subjects, just a final word on this. We've discussed what this means for you and how you will take a key drug like Zynic into the US market. Just a sense on what this could mean for the rest of the industry, the few players who are selling branded drugs in the US. I mean, at 100% tariff, is the business viable at all? Whether it's for you, I mean, you will be, of course, exporting it through Europe, or for anyone else who could be exporting from anywhere, including India?
I think there are approaches available because conceptually we have visited this subject, and it is possible to get the product in the US market at a lower cost. I cannot discuss this in detail because we have just explored this possibility and we haven't come with a very specific view.
Okay. Sir, as far as, and I know this is a speculative question as of now, maybe unfair to ask, but let me ask it anyway. Do you believe that there could be some measures even on generic drugs? It doesn't impact you. You've already sold the business ahead of the curve, so to speak. But, how would you assess the possible implications on the rest of the supply chain and perhaps even the future of generic drugs being sold in the US at this point?
See, Wockhardt is not, has exited a generic business completely from US. So as a company, we are not affected at all. But talking of industry as a whole, it's very difficult for the US to have drugs not coming out of India because 40% of entire usage of medicine in US comes from manufactured in India. And if there is a shortage of drug because of any other reason, it will have a catastrophic effect in the healthcare management in the US. So either the levy will be passed on to the user, that is to government or to insurance companies, and the prices of the drugs will go up accordingly.
Okay, sir, let's also talk about the other development favorable for the company, which is what the Lancet Journal is saying on McNuff. In fact, if you could just highlight this point as well. So what is the data and what are the implications then for the further scale up on McNuff?
See, what is important here, it is the first publication from India which has been covered by Lancet. This also represents the integrity and thoroughness of our clinical work and the molecule itself. Because we have been in discussion with Lancet for nearly 6 to 8 months, and they have collected all possible data to make sure that whatever is published is accurate. So I think from that point of view, it is a major milestone for Wockhardt and for India of the quality of clinical and development work we can do, which is of a global standard.
All right, Mr. Khurakiwala, final question before we let you go. For the year on the whole, you were indicating there's going to be some margin guidance. So could you tell us what we should work with for the company on the whole? What kind of revenue growth should we work with? And debt reduction plans? 3 numbers, sir.
We have exited the US market, as you know, and we incurred a loss of about 8 million last year. And we will carry forward some exit loss of about 3-4 million this year also. But our second half would be significantly better than the first half. And we would be also investing in a new molecule launch. But we would certainly improve our margin by at least 200 basis points.
Okay. And growth on the top line, sir, on a like-to-like basis, as you said, you've exited a couple of businesses. So what should it look like? If you can give us
But it will be double-digit growth.
Double-digit growth. All right. Okay, Mr. Khurakiwala, appreciate you joining in. Looking forward to chatting up with you as we get some more clarity with regard to these tariffs on the, in the United States and the way ahead. For the time being, we slip into a short break. On the other side, we'll be joined, by the Federation of Automobile Dealers Association. We'll also joined by Mr. Gulati of United Automobiles, who will be joining in to tell us what is the sense and how are things panning out on ground for the auto segment. Welcome back. Well, the markets saw a sharp downtick. Now it's trying for some kind of stability on ground. So that's going to be important to track. The Nifty bank actually has moved to the 20 DMA. So in terms of the market mode, the Nifty has broken the 20 DMA decisively, but the Nifty bank just holding on to the 20 DMA. So that's going to be the crucial swing factor for today. For the time being, screen is not looking good by any stretch of imagination. Headline index, breadth of the market as well. The hope is we see some recovery. Well, let's get to focus on the auto space then. And we have Mr. Vigneshwar, President of Federation of Automobile Dealers Association, and Mr. Vinkesh Gulati, Director of United Automobiles and former President of ADA, who joins us on the show. Hi, gentlemen. Good morning. Hope you're revving up the engine. Mr. Gulati, I think you're already in one. Tell us, Mr. Gulati, first, what kind of feedback have you seen? GST 2.0 is supposed to be setting up the industry for the best possible next 30 to 45 days. What's the feedback you've got?
So awesome. We should thank our Prime Minister for such a great reform. The kind of demand hike we have seen, it's not ever seen yet. So there are a lot of other issues where the dealers are stressed. But if I talk on the demand, the inquiry level is spooked like anything. The 22nd, which is normally the first day of Navrat, where it is more of deliveries, we have actually seen quadruplet inquiries and booking happening. Most of the dealership couldn't able to handle that kind of walk-ins happening in the system. But too happy, this 40 days is looking like the best ever festive season forever, I think, because customers are very excited with the kind of price cuts happening. And a lot of OEMs, including Mahindra and Bajaj, also has given them special discounts over and above the GST cut what has come because of the 2.0. So overall, customers whosoever were in loop is happy. And what luckily we have seen is there are at least 20-30% additional customers who weren't thinking of buying a vehicle during this festive period also coming in and doing the booking, where we are now confident to see a better year-on-year festive period going ahead.
You want to give us some numbers, sir? Mr. Gulati, what kind of numbers have you seen, say, in the first few days? There were some reports that suggested blockbuster numbers. Do you have a sense on any of that?
So I'll not be able to give you the actual numbers. Okay. Yes, is the right person to give that.
Absolutely.
But frankly, our bookings has actually doubled in the first 3-4 days. Whereas if I compare if I compare festive to festive bookings when we start the festive, we have double bookings than what we had last year. So obviously we'll see a major blockbuster festive this time. But I feel Vigneshwar would be better to give you the numbers point.
Absolutely. Let's get Mr. Vigneshwar then, to comment on this. Hi, sir. Good morning. Good to see you in good times, huh? Even from a stock market perspective, we're talking about the markets being at the low point of the day. The auto index actually is at the day's high. So that's telling you the kind of mood towards the sector itself. You want to break it down for us, the feedback you've received, what numbers do you all have on ground, and which segment actually is seeing a lot of traction?
So honestly speaking, I won't be able to give you numbers because we don't have tools to measure all these inquiries and bookings and all that. We only have tools to see how many deliveries have taken place, and the deliveries have been doing quite decently well. I have given a few calls around and found out that the entry-level segments, both in the two-wheelers and the four-wheelers, is where most of the a lot of bookings is coming in. As Vinkesh rightly mentioned, a lot of people who were not thinking of a bike or a car ownership have actually jumped into the bandwagon. So I would really like to thank our Honorable Prime Minister, our Honorable Finance Minister, along with all the state GST members who have actually come together, thought as a one mind, and taking this landmark, path-breaking GST reform. It has made GST simpler, and more importantly, it has also brought down the costs, not only in automobiles, but in every sector, every service, every product, the prices have dropped. And this would really help in terms of customer going out there and shopping. And the customer going out there and shopping also means that there's a lot of circularity of money, so which again adds to the buoyancy.
Mr. Vigneshwar, hi, good morning, Surabhi here. Let me ask you for two numbers if possible. Even a rough estimate will help. Before the GST announcements, what was the festive season growth in retail sales that you were expecting? I mean, like to like, festive season last year to festive season this year. And now after the GST cuts and seeing the action on ground and the price discounts, what is the estimate? How much growth will the industry see this festive season?
I can give you an estimate of what we're expecting this festive season is anywhere between 10 to 15%, which is very good given the fact that we've been growing at 2.5–3% in the car segment, I mean the passenger vehicle segment. And this year we've been only growing in the low of single digits even for the two-wheeler segment. So probably 10 to 15% is what we're expecting minimum. And that's going to be a breakneck growth, taking us back 3 or 4 years before. 2001, 2002, we had really good double-digit growths. We should be back on that track.
Okay, 10 to 15%. Yeah, industry hasn't seen that for a while. Specifically, Mr. Vigneshwar, on small cars, right? And we haven't seen even manufacturers sound so optimistic when Maruti has been saying that they're seeing the best ever inquiries in years in the small car segment. That segment was almost written off. Is this going to be a more durable revival? Will we see a bigger product portfolio shift? I mean, the market had gone entirely one way, and that's SUVs. Do you expect any significant shifts after the price cuts?
I'm not too sure about it. The SUVization, as I call it, of the world is taking place. As not only in India, throughout the world, SUVs are taking a lot of space of the car markets. A lot of shift is happening towards SUVs. In India, I don't see a major shift because even in India, the premiumization of the market is happening. People are going to higher end products. But a lot of customers who were not thinking of buying a two-wheeler, an entry-level two-wheeler or an entry-level four-wheeler, will be thinking of it right now, are thinking of right now, and we are seeing them walk into our showrooms to make a buying decision. So that's amazing because all this having a large base in the entry-level segment will lead to better sales in the future too because they move up segments. So I think this is going to be sustainable. The small car and the entry-level two-wheeler revival, and it's going to be here to stay.
Okay. Let's get back to Mr. Gulati as well. Mr. Gulati, so the estimate is 10 to 15% growth this season for passenger vehicles, as Vigneshwar said. You give us your sense on the two-wheeler market as well, domestic sales. I mean, some companies have been struggling in the past couple of months, others have done well. But in two-wheelers, what should we expect in the entry-level segment up to 125cc and beyond that as well?
See, actually, we are seeing great inquiry pull up in 100cc also, which wasn't there before. And two-wheeler has always struggled where the major market was. And slowly, if you see with the electrification happening, the motorcycle sales going down, even 100cc going down. With the GST reform too, we are seeing that 100cc bikes have already started getting that kind of inquiry we used to get, around 6-7 years back. And I'm hopeful that will increase the pond. So we had seen two-wheeler, the maximum in 18-19, I feel. We haven't reached that figure. But with the kind of GST cut we have seen, an approximate 5,000 to 10,000 rupees price cut in the entry-level 100cc, 125cc, we are sure that a lot of customers who were not thinking of buying a new two-wheeler will come in. and it will benefit more on the rural side and additionally the salary class people, which is on the lower strata, will obviously come in. So we are confident of having, like Vigneshwar said, the entry-level cars are seeing momentum. We are also seeing a similar momentum at our Bajaj showrooms on 100cc, and if I talk to my Hero co-dealers, they are very, very excited because of 100cc prices going down and the kind of inquiries they have now started seeing because of that. And if that actually comes to conversions, I feel two-wheeler market slowly and steadily can go back to its glory days.
No, absolutely. And I think we'll have to track this one as sales proceed and the festive season goes on. It's a real pleasure to speak to both of you to get an update from the ground. Mr. Vigneshwar, thank you very much for joining us. And Mr. Gulati, really appreciate you coming on as well. So that's markets, that's autos for you. 80 points lower. We've recovered a little bit. We're just above the 24,800 level. I think that's the critical number. The low today, Nigel, has been 24,760.
Yes.
In that sense.
And the pharma stocks, they are the ones that are seeing a big recovery from the lows of the day. Just pull up the index itself. That's recovered considerably. In fact, Sun Pharma stock was down 4.5% in the first 5 minutes of trade. That's now down close to 2%. It's still down, but there is a bit of a recovery. Tata Motors got spanked yesterday. That stock, in fact, has fought back. That's up close to around 2% as we speak. So good going out there. And the auto pack, as we had Mr. Vigneshwar as well as Mr. Gulati, both of them saying things looking very, very strong on ground, inquiries, demand as well. So for the time being, the street is buying into that, and that index, is doing well in a market that's actually seeing some selling. The problem really is tech. Tech is not able to see a relief rally. Wipro moves to the low point of the day. That's the problem pocket. Asian Paints as well, after seeing a good rally from the recent lows, that's given away most of that rally. It's back down to around 2,300 rupees odd. And IndusInd Bank, that's a stock that's moved a little bit lower. The Nifty Bank, very, very close to the 20 DMA. It needs to hold on to that mark. Surabhi?
Okay, so those are some of the stocks in focus. The market, well, at least it's not a one-way down move. If you want to be an optimist, you have to look at that side of the story as well, because Nifty had breached 24,800, and now there seems to be some semblance of stability. And by the way, look at pharma stocks. Sun Pharma, remember we started with a 5% cut when the market opened. Now it's down to about a 2% cut. But the worry is around IT now. A lot of large cap IT is under a lot of pressure thanks to Accenture's guidance. Remember, Accenture is guiding for 2 to 5% growth in this year versus growing at 7% last year. So that obviously has soured sentiment. Once again, Tata Motors is, of course, zooming ahead, on some positive news around the company. I'm just looking at the big losers now because the mid-cap market obviously is falling quite a bit. Wari, where there's an investigation that's started in the US, this is as per Bloomberg reports, because of circumventing some of the import rules. That stock's down 5.5%, so it's the big one. Wockhardt itself is down about 5.5%. You just heard the management speak to us about their plans and implications of the 100% US tariff. Okay, well, with tariff, let's actually get back to the big story itself, and Ekta is back with us. Ekta, so some of these stocks like Wockhardt, I mean, we just heard Mr. Khurakiwala explain how they'll still go ahead and file for, one of their key drugs, but I think the market is concerned. But you tell us more, I mean, Sun itself, what more now?
Well, just to reiterate that as of now, this 100% tariff is going to be applicable to patented and branded drugs. And if in case you do have any kind of manufacturing in the US, your building capacity in the US, then you would be exempted from it. Now for Sun Pharma, they have, the maximum exposure here because they do have the branded portfolio of drugs which will be possibly impacted. So that means that they will have, their specialty portfolio, which is around 19% of their total sales. But they have indicated that they do have US operations. When they were quizzed about it in the previous call in terms of onshore manufacturing, they said that they are sufficient at this point in time when it comes to onshore manufacturing, and that was what the implied view was with regards to Sun Pharma. Whether or not they need to, go ahead further, that will be something to watch out for. For Wockhardt, it is a novel antibiotic which will eventually be a patented drug if in case they do get approval. So the street is fearing that. So that's the reason the stock is down around 5% because they don't have any presence in the US. So they would be probably impacted the most. But they are saying that they do have operations in Europe. So that is a point of lack of clarity because one does not know whether or not the US-Europe tariff would apply or whether or not this is an overarching announcement which is made by the Trump administration. So we're getting very micro in these views as of now. Let's see how things pan out in the next couple of weeks. But this is the immediate impact that we can talk about when it comes to this particular announcement. It will also have to be seen that if in case, you are increasing your presence in the US, then CDMO manufacturers could probably get impacted because of the supply chain and whether or not work would actually move away from CDMO companies. So as of now, it is a lack of clarity. We're just assuming that these things would probably play out. But when it comes to Indian generic manufacturers, say the likes of Dr. Reddy's, Lupin, Cipla, etc., you're seeing them largely unscathed because they are the guys who manufacture and supply the generic drugs to the US, which is basically 40% of their generic drug portfolio in the US. So they will not be impacted because they don't have that branded portfolio like the AstraZenecas and the Eli Lillys of the world, which will need that kind of, manufacturing capacity in the US to evade these kind of tariffs. So generic companies, as of now, unscathed, but companies which do have an innovative portfolio will be under the banner.
All right. Ekta, thank you very much for that. So that's a pretty rounded perspective on the entire matter. Sudeep Shah is with us, Head of Technical and Derivatives at SBI Securities. Sudeep, good to have you with us here. Thanks for your time. Just a view on indices and then, of course, your trades.
Good morning, Prashant. Prashant, post the last 5 days, lower top, lower bottom formation in Nifty, we have seen another gap down opening in Nifty. But now today's opening and sustaining around this 24,750 mark is important. I feel from here on, we might be heading into key support zones which are closer to 24,700, 24,800. This 100-point band will be extremely crucial. I feel that last few days a lot of negativity or lot of negative momentum may be already pricing, and we might be forming a extreme short-term bottom here on between 24,700 and 24,800 zone. So from here on, I feel constructively, slowly and steadily within the large cap space, one or key selective mid caps, one should start getting bullish. And on the upside now, from a reversal perspective, for the reversal to be confirmed, I feel 24,950 is that first level that we should be eyeing for. About 24,950, the first levels that the indices may go up to would be 25,150, 25,200. So key levels 24,700 and 24,950.
Okay, got that. Any individual stocks, Sudeep?
One stock which is coming on radar is L&T Larsen. Now, I feel in these volatile times and times where the markets are a bit dicey, it's better to be sticking to be with large caps. And Larsen has given a breakout now on a daily chart as well as the weekly chart. The stock is doing quite well. It's holding above its key moving averages, and while the markets are falling, it's steadily rising higher. That means that there is some kind of a better relative strength witnessed there. So I feel from here on, Larsen can be added on all dips up to 36.70, 36.80. Keep a stop of 36.30. The first targets that we are looking out in Larsen would be closer to 38.50 and 39.30, maybe in the next couple of weeks.
Okay, all right, got it. Remember, Larsen has finally managed to come to some sort of an agreement with the state government in this Hyderabad metro, which has not worked out too well for them. They'll be getting some money. And I think that overhang at least seems to be getting out of the way in that particular project for them. Stock's doing well today. Take a break right now. Quickly come back on the other side and we'll get you all the latest from the commodity universe with Manisha. Welcome back. Let's quickly get to commodities and find out what's brewing in Manisha's universe. Usually it's all sparkling, but let's find out. What's the headline, Manisha? Happy Friday to you.
To you too. So almost everything seems to be surging up, and we seem to be closing this week on a much higher note, whether it's about energy, base metals or precious metals, by the way. But I want to talk about silver because we are inching higher highs onto this one. $45.20 an ounce is a new 14-year highs, and $45 an ounce also has been a level that many banks and brokerages put out as a target for the end of this year. We've already done that now. So it has been very firm industrial demand that we've seen from photovoltaic, electronics, electricals that has kept the silver prices higher. The tight physical availability in the very near term has been making premium into the prices for the near term as well. Also, there have been recent smelter and processing concerns, disruptions as well, which have been supportive. And then the markets are looking at premium for the near-term delivery when it comes to silver. Also, take a look on the strong ETF buying, physical demand, investment demand that silver seems to be looking at. And initially, we were calling it catch up to the gold trade, but now it clearly has outperformed gold as well when you look at the last couple of quarters there. Take a look at the kind of price move that we have seen in this year for silver. And I've only taken the months, or rather the price moves there. We started this year with 29.5. 33 was a multi-year high in any case, and then we saw 37 by the time it was mid-year. 39.7 almost led people to believe that 40 is not too far away. And from August and between September, so that is that 1 month that you see, we've seen prices gain up by almost $6 an ounce for the silver prices there. It has been a huge run-up in case of silver. But I don't want to talk or leave out the other precious metals. And when you look at the relative performance that you've seen for many of these precious metal prices, there you have silver up by 55%. It did go to 57% higher as well in the overnight markets, that is in New York. But platinum continues to shine brighter, 73% up in this year until now. And we've seen 42 and 43% kind of gains come in for gold and palladium as well. So very, very strong moves coming in for that market. I also want to leave you with one more thing here, and that is about the silver imports in sense of jewelry into the Indian markets. Now, those are a couple of HSN codes which the government as of now has restricted in sense of imports into India. Let me take you through the fact that the imports are restricted, that those are the codes for plain jewelry and not for studded jewelry. Also, India imports nearly 80% of its silver jewelry from Thailand, and this is under the FTA agreement there. And India does look at just about 10% of its overall jewelry in sense of imports there. So it's only 10% of a contribution, really not a big number. But if you look at the overall number there between April and July this year and last year, and you will see that big gap coming in there. So last year, import from Thailand was 87 tons. This year, it has been 361 tons. With the kind of run-up that we've seen in silver prices, this clearly is a gap that the government wanted to fill, and they have done that with restricting plain silver jewelry imports from Thailand.
Manisha, simple question to you. What is the best for viewers who are watching, right, who want to sort of talk about, buy silver? What's the best route?
I think ETFs is the best way to do this, Prashant, because you can then SIP it and do it, because silver is a bulky metal, right? 1,35,000 for 1 kg, 1,20,000 rupees per 10 grams for gold. So when you look at the difference, clearly silver is more bulky. But there's a lot of physical buying as well. People want to hold it. And that has been the criteria that we've seen in Asian markets. But when you look at Australia, US, Canada, there as well, there are reports now coming in that while people are investing via ETFs, and that's the best way to do it, but physical gold clearly is demanding a premium right now. Silver, rather.
Physical silver, demanding a premium. Okay. Thanks very much, Manisha, for that. And lots of questions in terms of what's the best way to do it if you want to gain sort of some exposure. Both metals, gold and silver, have done phenomenally well. We'll take a break. Latha will come on the other side, and CNBC-TV18 Citizens Monetary Policy Committee on whether RBI should or will cut rates on the 1st of October. That's the discussion, the question that we will debate. Stay tuned.